Bloomberg Tech is live from the heart of Silicon Valley with Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, SpaceX is selling investment-grade bonds for the first time following its record-breaking IPO. We'll have the details. Plus, Micron strikes an AI infrastructure agreement with Anthropic to drive enterprise AI adoption and a lot more. And Chevron signs a 20-year deal with Microsoft to power a West Texas data center. Could be one of the biggest in the US. Good morning. Monday, June 22nd, 2026. SpaceX's inaugural bond sale. This is about repaying their existing debt, funding corporate needs, and Bloomberg's reporting has been spot on. What we understand is that right now you have the same banks they've been working with on their existing financing, going out, holding investor meetings, gauging appetite. But we believe that they'll look at maybe raising around $20 billion through this mechanism. By the way, the stock is down for a third straight session, down 10% this Monday, trading below $170 a share. Remember, this is an IPO that priced on June 12th, June 11th, traded June 12th, $135 a share. Now, why would a company sitting on $100 billion and more of cash need to tap the corporate debt market? Bloomberg Intelligence writing that, quote, despite operational questions and considerable key man risk, they expect SpaceX's debt issue to be very warmly received. There's only one man for the job, Bloomberg Intelligence senior credit analyst Robert Schiffman. That's the story, right? Why would a company that has $100 billion of cash on hand do this? Explain.
Well, I didn't think I could be more bullish, but every day I wake up and show up at Bloomberg, I'm more and more bullish on AI. And I think this deal is just going to support that. You know, why do they need to raise more money? It's because over the next handful of years, they're probably going to spend a lot more than $100 billion. In fact, their free cash flow is probably going to be a lot more than $100 billion on the negative side. So they're going to need money because they're building the next hyperscaler business in space.
Let's go to the investor demand or appetite for this. We had reported even prior to the IPO that SpaceX had managed to get investment grade ratings from the three main agencies. And in your react, you basically say this is how we think they'll stack up relative to their hyperscale peers who have a greater rating still. Why does all of that matter?
Well, listen, nobody owns SpaceX right now from the bond side, so there's going to be enormous demand. When you have an inaugural bond offering like this, it's going to be a feeding frenzy. And quite frankly, I think 3/4 of the people that are going to buy the bonds aren't even going to know what this company does. It's going to be very much of a buy now, ask questions later. But what do they have supporting them? They've got very strong, stable investment grade ratings. You do not have to worry about this name going to junk. You've got perhaps the greatest investor of our generation, Elon Musk, who I think has replaced Warren Buffett. And you have $100 billion of cash sitting on the books, plus tremendous upside across a diversity of businesses. My sense is if they raise $20-odd billion, you're going to have a book size that's well north of $100 billion.
You mean the demand, $100 billion of demand for $20 billion of supply. Just real quick, like trying to compare and contrast the equity story. The stock's down 9%, $167 a share. For the equity investor, they read the prospectus, they listen to Elon Musk, and everything that's being pitched is very far into the future. But is the kind of common denominator between the equity investors' approach and the credit investors' approach to SpaceX trying to understand the path for CapEx? Does it work the same way?
Listen, equity and credit are different. Equity is based on hope and future cash flows. Credit generally is based upon present cash flows and what leverage looks like right now. I actually do think that those are going to somewhat come together over time. This company is committed to reasonably low leverage, below 3 times. They're committing to having $25 billion of cash on the books for the foreseeable future. And there's a hope of just absolute tremendous growth. Quite frankly, it's not so different than what Microsoft or Alphabet or Amazon is doing. And just remember, in the early days of names like Amazon, they lost a lot of money too. You have to spend money to make money. This is what this company is doing. I think the bond market's going to be there to fund it. And I think the equity market, when you start thinking about valuation, as all these AI revenues in particular come in. Remember, this company is going to transition from what is a satellite data business an aerospace and defense business to what's going to be a hyperscaler in the sky, I think there's nothing but upside when it comes to revenues and cash flows for this business. So bondholders and credit holders will sort of all be looking at the same thing a few years from now.
Bloomberg's Robert Schiffman, Senior Credit Analyst at Bloomberg Intelligence. Thank you very much. We talked a lot about SpaceX so far this morning, but the bigger market story is this return of tech leadership, right? Chip stocks outperforming and leading again. Software continues to lag. There's a lot of focus on lower energy prices, what's happening in the Gulf, and that's supporting the growth trade. Joining us, Senior Portfolio Manager Tiffany Wade at Columbia Threadneedle. There's a lot to kind of put together in this morning's session. But again, technology continues to be the story in this market. Is that true for you?
Yes, that's absolutely true. We did see tech stocks take a bit of a breather, including semi stocks last week, but they're off to the races again this week, and that continues to lead the market higher.
Of course, for investors of all types, the outlook for monetary policy and rates is important. It was really interesting. Nouriel Roubini on Bloomberg Television earlier basically saying, nah, it's still tech. Just listen to this real quick.
People obsessed with the Fed, whether it's 50 basis points higher, whether it's right now. What's the difference? The key story is tech boom, and that's going to be the most important first-order impact of anything else.
You know, Tiffany, I grew up in the Bloomberg newsroom school of, well, you got to understand the rate environment because higher rates discount the present value of future cash flows, and future cash flows are one way that we measure the health and valuation of technology companies, big and small. Does the Fed really matter at all?
I think the Fed still matters a lot, and it matters a lot for tech stocks as well. It matters a lot for high growth stocks. We did see a slightly more hawkish Fed meeting last week, Kevin Warsh's first Fed meeting. However, you know, quite a bit has changed since the data they were looking at last week, including the MOU between the U.S. and Iran. So I think we might see, you know, potentially some different news coming out of the next Fed meeting if oil prices continue to normalize.
And in the background, of course, for the Bloomberg Tech audience, you know, there are headlines coming from the vice president and his participation in the talks between the United States and Iran. We're very soon going to start talking about earnings again. And I just wondered, Tiffany, from Columbia Threadneedle's perspective, how important earnings momentum is going to be for a market where technology continues to dominate.
We're going to get a first read on that from Micron this Wednesday. I think that's going to be very important to see if the momentum from these stocks can continue. We're going to want to see continued revenue upside from a lot of the semiconductor stocks, and we're also probably going to want to see continued CapEx, positive CapEx comments from all of the hyperscalers that will help keep the spending party going for all of the associated infrastructure names related to AI build-out.
It's really hard in aggregate to kind of say where's the beginning, middle, and end here. You know, I think you'd note, right, Tiffany, that last week some of the chip stocks, the picks and shovels, took a bit of a breather. And off we are again today with the Philadelphia Semiconductor Index outperforming and a gauge that's up 90% year to date. How long can that carry on for?
I think we're going to see this continue for another couple of quarters. The outlook for these stocks related to AI infrastructure spending is tremendous. And the revenue and earnings estimates continue to be revised higher. And I think as long as that continues, you'll continue to see these stocks working. And some of the announcement we've seen, you know, with Micron and Anthropic, and then also around, you know, Microsoft and, you know, more data center spending in Texas continues to, you know, reinforce the story that this spending is going to continue for another couple of years and probably continue at a faster pace than it has been for the last 1 or 2 years. So I think we'll continue to see those positive earnings revisions that will continue to push the stocks higher.
We started the program today talking about SpaceX's inaugural bond sale, but I just used that as a case study that with CapEx, both in equity, the market's being flooded, right? Alphabet doing its offering, the use of corporate credit to fund what's going on. How closely are you tracking these companies going to market to get the capital they need to fund these big commitments?
We're certainly focused on the outcome of these bond sales because I think it's an indicator of the appetite for the market for the amount of CapEx spending that the companies are doing. It's also an indicator of future CapEx expectations. So as those bond sales continue to increase in size, it can, you know, it means that CapEx spending intentions continue to rise. So it's certainly something that we're watching to indicate the health of the CapEx spending cycle and also the intention of a lot of the large companies around additional spending for AI infrastructure.
Tiffany, real quick, what's the next thing you're watching for on your calendar?
I think it's probably earnings. Micron this Wednesday is certainly a big one that we'll be keeping an eye out for.
And there's been some news this morning about Micron and a deal with Anthropic, which we'll get to later in the program. Tiffany Wade of Columbia Threadneedle back on Bloomberg Tech. Thank you very much. Now, coming up, Meta invests $900 million into an Indian fintech startup called Cred, with plans to appoint its founder as the new leader of WhatsApp. We've got more on that story next. And sticking with big tech names, also taking a look at shares of Alphabet, parent of Google, down 6% in the session. Biggest drop since February as it stands. A lot in the news flow has been about the departures from various parts of Google's AI initiatives, the latest being prominent AI researcher, Google DeepMind Vice President John Jumper said Friday he was leaving for Anthropic. That seems to be weighing on this stock. We'll keep tracking it. This is Bloomberg Tech. All right, some headlines have just crossed the Bloomberg terminal. SpaceX appears to have signed a deal with Reflection AI worth about $6.3 billion. That's according to some reports out there. I think the company has also just put headlines out of its own. SpaceX can end the deal after 3 months, and Reflection is set to pay SpaceX $150 million per month for that compute as part of the deal. It didn't really do much to ease the pressure on the stock, which is, again, down for a third straight day. But still above its IPO price, $135 a share. Big tech is turning to big oil to meet the electricity demand of the AI boom. Microsoft has signed a 20-year deal with Chevron to build a massive natural gas-fired generating station for a proposed data center in West Texas. Dubbed Project Kilby, the power plant's expected to power up by 2028. Bloomberg's Kevin Crowley joins us for more from Houston. The scale of this is on paper pretty big, right? Because they're talking about ramping up to about 2.6, 2.7 gigawatts. What do we need to know about this? And like the natural gas part of it, the Permian, West Texas, very interesting.
Yes, exactly. Well, that's the key part of this. It's a huge power plant to fund an enormous data center. But the really important part is it's right in the middle of the Permian Basin, which many people know is the biggest oil field here in the US. But with all the oil that comes up, there's an enormous amount of natural gas that also comes. And there's so much natural gas within the basin that it actually often overwhelms pipeline capacity and has to be either burned off or companies have to pay people to take it away. So there's this abundance of natural gas. And that is what Chevron and Microsoft and their partner Engine Number One are looking to take advantage of here. They've got incredibly cheap natural gas that can fuel the power station that will then power this big data center that Microsoft plans to build.
You discuss in your report the bigger picture of what Microsoft's trying to do, right? Microsoft has said it wants to double data center capacity of its own over the next 2 years. And in aggregate, that's the direction that the United States is going in over the next decade. But they'd also had these like prior commitments to match the sourcing of their power in terms of their commitments from renewable sources. This is natural gas. So how are they managing all of that?
Well, Microsoft have said that they're pursuing kind of a diversification strategy. So they want diversification both in terms of geography, but also in terms of fuel sources too, renewables and natural gas, and I think they're pursuing nuclear as well. I mean, obviously, natural gas is on the fossil fuel side, so it does create a lot more emissions. But we are seeing some of these big tech companies diluting or walking away some of these prior commitments to 100% renewable energy, just because of the sheer scale of the demand and the ambitions that AI that they have. There is in this project there are guardrails to mitigate the emissions, and they do have plans to maybe build in some solar, maybe some batteries at some point in the future. Right. But at the end of the day, it's an enormous natural gas plant, so the emissions are going to be sizable associated with that.
Chevron shares modestly higher, Microsoft shares modestly lower after this deal was announced. Bloomberg's Kevin Crowley in Houston. Thank you. Well, modestly, Microsoft's down 2%. Turning now to more news in big tech. Meta is shaking up the executive suite at WhatsApp and is in part a massive $900 million investment into an Indian fintech startup, Cred. So Meta is tapping Cred's founder, Kunal Shah, to step in as the new global chief of WhatsApp to build out new revenue streams for the messaging platform. Bloomberg's Kurt Wagner joins us with the story. It's not straightforward, this. Okay, so basically the news is there's a new head of WhatsApp, but the mechanism that Meta's used to get there is also interesting.
It is, and you're right. There's two parts to this. There's the investment part in Cred. There's the new executive for WhatsApp in Kunal Shah. And this is a strategy, Ed, that you may be somewhat familiar with from Meta, with this sort of like invest and recruit at the same time. This is how they got Alexander Wang from Scale AI last summer. They invested heavily in Scale and recruited Alex Wang at the same time. This is a very similar approach, smaller scale. This is a smaller investment than last summer's. But this is sort of their way of bringing entrepreneurs who have their own businesses, who have, a financial stake in a startup, and enticing them to come work at a right. More established company like Meta.
How's Meta sort of explaining this? We put a lot of emphasis on the idea that WhatsApp can monetize in different ways, future revenue streams. Is there any kind of hint of what that looks like?
Well, they're doing a handful of things right now, including ads, subscriptions, and business messaging. Those are sort of the three things that are going for revenue. What I think is important here is that Kunal Shah being from India and having an Indian startup is not a coincidence. WhatsApp is huge in India. They see a ton of potential there from a business standpoint. And I think they thought that it was important to have someone very familiar with that market and very familiar with how WhatsApp is used in that region coming in and taking over. And so the hope is certainly that he can take those revenue streams that are sort of already in place, but grow them considerably in India, but also in other markets outside of North America.
Bloomberg Tech's Kurt Wagner with the Meta WhatsApp story. Thank you very much. I want to go to China's battery metals market. Chinese lithium futures have plunged nearly 9% over the last 2 days over speculation that CATL could soon restart one of the world's largest lithium mines. A preliminary provincial land notice has some investors betting that the site may reopen in the second half of 2026. Now, that supply volatility comes as Beijing tries to sharpen its geopolitical leverage over other critical minerals integral to making everything from iPhones to missiles. China has imposed new export controls on major US rare earth producers, MP Materials and USA Rare Earth. The retaliatory move comes after the Pentagon blacklisted some of China's biggest firms earlier this month. Okay, coming up, Apple's design revival. Incoming CEO John Ternus looks to restore the creative edge that defined the iPhone era. That's next. This is Bloomberg Tech.
I'm Yahira Anand, and it's time now for Talking Tech. First up, Tencent is giving WeChat an AI upgrade. The company is testing a new assistant called Xiaowei with a small group of users, allowing them to complete tasks through text or voice. The move could bring AI to WeChat's more than 1 billion users and help Tencent compete with rivals like Alibaba and ByteDance in China's AI race. Plus, Robinhood is looking to raise $2 billion through a convertible bond offering, tapping into a booming market for corporate fundraising. The company says about $300 million of the proceeds will go towards share buybacks, with additional funds earmarked for hedging transactions tied to the deal. And Lime is gearing up for its Wall Street debut. The electric bike and scooter rental company is looking to raise up to $181 million in its U.S. IPO, offering 6.7 million shares at between $24 and $26 a piece. At the top end of that range, the Uber-backed company would be valued at about $1.7 billion. Ed?
Thank you very much, Yahira. Now, Apple built its reputation on iconic product design, but the influence of the team behind the iPhone and iPad has faded over the past decade. Bloomberg's Mark Gurman writes in this week's Power On newsletter that the incoming CEO knows a major design shakeup is needed and is getting ready to put his firm imprint on the team. Mark joins us now. And this is about the industrial design studio that in the era of first Steve Jobs and then Johnny Ive for a very long time held a lot of power within the organization at Apple. What are you writing about in Power On that's changed, and why do you think that the incoming CEO takes us back to that place of power?
Yeah, over the past decade or so, you've seen the industrial design studio go from where exactly the future products are dreamed up, where the whole company would come in to rally around the next big thing, leading to products like the iPhone, the iPad, the iMac, the iPod, the Apple Watch, you name it. And it's now more of a service organization where different teams, operations, engineering, they come in, they get what they need, and they get out. It's no longer the central hub, the influential center of innovation for the company, and John Turnus knows that things need to be shaken up there. The head of the industrial design team, Molly Anderson, she's known as a great individual designer. She's known as someone who's beloved by her team, but it's not like Apple went out to look for the best industrial design leader in the world to take that position. They made that choice from a place of defense, not wanting more people to leave the team, versus the perspective of a company that's worth $3 trillion plus that could go out and get anyone they want to lead design in this post-Johnny Ive era that's already been going on for nearly a decade.
Mark, you've detailed recently the kind of roadmap on the hardware side for not just the rest of this year, but beyond that. Is there a case study of where this kind of return to design focus plays out? We just have about 30 seconds.
Yeah, I mean, we would like to see bigger design changes, right? For the first time in 20 years, you're going to have a meaningful shakeup to the iPhone over the next few months with the foldable phone, which I'm calling the iPhone Ultra. But there's a lot more to be done. There's more product categories. Major changes are necessary to freshen up the AirPods and the Apple Watch. Those are categories that have essentially looked the same since 2016.
Right. Bloomberg's Mark Gurman, who puts Power On Sunday mornings and then comes on Bloomberg Tech Monday to go through it. Thank you so much. Now, coming up, Micron lands a key deal with Anthropic as AI demand keeps surging. It's so interesting to see Micron, a memory name, go direct to a frontier lab. We're going to go through that. This is what your markets look like. Kind of muted, but outperformance in chips, which has been the story of the year. It's halftime here in San Francisco. We'll be right back. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Our top stories today: SpaceX's bond sale and Micron striking a partnership with Anthropic. Bloomberg's equity reporter Carmen Reinke here with details on both. Carmen.
Yeah, thanks, Ed. So we're seeing a lot of red on the screen today here with SpaceX. Shares are down about 8% off the lows of the day. But if this continues, this will notch a third straight day of selling in the name after its record-breaking IPO. So what we're seeing here this morning is that investors might be reacting to a few different things. One is this investment-grade bond sale, the company looking to raise even more money to spend on AI, fund its sort of future growth after raising a record $75 billion in an IPO. The other thing we're seeing here is, classic volatility that we see from IPOs, especially ones that have low float, like we know is the case here for SpaceX. We also are looking today at shares of Micron. So this stock is looking a little bit better today, up about 4.4%. It's bucking the broader trend down in the market today. What's happening this morning is that the company said that it has a strategic agreement with Anthropic, so it's going to work together on things like memory and storage, architecture for AI, and also gave some money to one of Anthropic's funding rounds. This company has been on an absolutely massive stock rally. The shares are up more than 260% from a March 30th trough here, and we're going to be watching this one really closely because it reports earnings on Wednesday after market close.
Bloomberg's Carmen Reinke, thank you very much. Let's stay with Micron. Jake Silverman of Bloomberg Intelligence says Micron's new supply deal with Anthropic highlights just how tight memory chip capacity has become. He says major AI data center customers are increasingly locking in long-term agreements to secure that supply. And Jake joins us now. This is the thing, though. It's a deal between Micron and a frontier lab direct, right? Not the middleman that we call hyperscale. How unusual is that? How surprised were you to see it?
It's definitely not typical for memory makers themselves to sign these kind of deals, but it's not necessarily uncommon for big customers to look for supply assurances. Hyperscalers themselves have often done this in terms of how you think about wafer allocation from someone like TSMC, for example.
In your React, you're talking about it being reflective of the situation, the state of play, and how tight supply is. But this is good news for Micron, right? If you just go on the share reaction alone.
Yeah, this is good for Micron in the sense that it gives them a little bit more visibility into the actual downstream demand, at least theoretically based on what we're seeing from the agreement that they actually put out in their press release. So, Micron needs to build out capacity, right? The entire industry is supply constrained, and this allows them to potentially build it out in a responsible way so that when Anthropic is serving their customers, increasing their capacity, not specifically of memory, but the chips to allow people to use their models. So now, theoretically, Micron can get an idea of exactly how much chip demand there actually is.
You write in the React note that this sets them up well for the next down cycle situation. Historically, memory markets have been cyclical, right? Boom and bust. We talk about that a lot on the show. But there are loads of people that don't think there'll be a down cycle, in the traditional sense, because of the trajectory of data center building and investment. Just explain your point of view on that.
Yeah, I think just if you look at historical trends, having covered memory for a while, we've always seen up cycles and down cycles. And I don't think that just because we're seeing very robust demand right now, it doesn't mean that we won't see price declines on, say, a sequential or year-over-year basis in the future. What these agreements might do, though, on the other hand, is it might reduce some of the volatility. We've seen massive price decreases in the past during down cycles, such as 50% or so quarter over quarter. So we might see a reduction in some of that volatility. And at the same time, if you look at past cloud cycles, there are periods where CapEx it flattens or declines slightly, and so that might be an opportunity for hyperscalers to get slightly better deals on the actual memory that they're purchasing. So we don't necessarily think that the cycle is not going to happen again, or a down cycle, but we do think that we might see less volatility, more of a straightforward idea of what the demand levels will be over the next, say, 5 years.
Jake, as you know, Micron reports fiscal third quarter earnings after market close Wednesday. What are your expectations going into that?
Yeah. We think they're definitely going to offer guidance results that are above consensus right now. We do think that they'll talk a little bit about some of their contracts, but I think one of the reasons that they make this announcement today with Anthropic is it's something that they can highlight to investors to give everyone an idea of what types of customers that they're signing to these agreements. But we don't necessarily think that they're going to give a lot of details in terms of, we don't think they're going to give anything in terms of pricing. They might not say anything in terms of the length of these contracts or a lot of the very intricate details. But that said, I think they'll probably give a longer term view of how they see the market, given the fact that there are more of these contracts being signed. And memory prices continue to be very strong, and the environment is very favorable for them, at least through this year, and we think at least into next year as well.
And to recap, Micron up 4% on this supply agreement with Anthropic, but up more than 300% year to date. Jake Silverman of Bloomberg Intelligence with the analysis. Now, coming up, the CEO of Baseten and one of its lead investors is coming on the show to talk about the inference startup's latest $1.5 billion fundraise. But this is really a conversation about the economics of AI, and particularly as we transition increasingly to inference, the use of open source, and getting the best cost dollar per token. Really, really looking forward to this one. It's next. It's Bloomberg Tech. NVIDIA is developing chips and software that will make humanoid robots safer around people. Humanoid robotics are expected to generate $200 billion in revenues by 2035, according to Barclays estimates. But current safety systems can make the machines less productive. NVIDIA's Halos software will give robots a much better sense of their surroundings so that they can interact and even make contact with people. We're going to talk a little bit more about that later in the week. AI inference startup Baseten has raised $1.5 billion across two tranches, one at an $11 billion valuation, the other at $13 billion. Baseten specializes in delivering software and computing capacity to companies tapping open source, typically lower cost AI models. The firm's co-founder and CEO, Tuhin Srivastava, joins along with one of its investors, Altimeter capital partner Apoorv Agrawal, whose firm co-led the round. And actually, it was really interesting, the list of participants that backed you. Let's start with the basic questions that the audience always has, which is, wow, $1.5 billion round, it's a lot of funds. But the stories seem to not change, right? Compute as a constraint, talent as a competitive marketplace. I'm assuming that's where those proceeds go.
Yeah, absolutely. Look, with inference right now, what we are seeing is there's a lot of demand for inserting intelligence everywhere we possibly can. There's open source models are getting very good.
Right.
And post-training techniques to specialize those models for specific tasks are getting very good. And as the app layer comes online, there's an enormous surge of demand. For us, what that means is, look, we need to go procure a lot of compute to be able to fulfill that demand, and also hire amazing infrastructure engineers and research engineers to be able to build the software layer on top of that.
Just real quick, what's that like trying to acquire the compute? Like, do you have any leverage in that market if everyone is supply constrained?
Yeah.
How is the experience of being a company of Baseten's age and size going to NVIDIA, as an example, saying we kind of need this?
Yeah, look, we have a very strong relationship with NVIDIA, and they've been very supportive of us over the years. Look, one thing that we have realized is that you cannot be reliant on one compute source. You have to,
diversify.
You have to diversify, not necessarily from a chip perspective, from a cloud perspective. So, we acquire compute from 18 different clouds now. We sit in around 90 different clusters. And that's the flexibility we need to be able to acquire compute and fulfill the demand.
I posted on X that you were both coming on the show, and Apoorv, I kind of put this question out there, that if you could only invest in one part of the 5-layer cake, as Jensen calls it, what would it be? But Altimeter's been so busy, with the frontier labs at one end, and other parts of the 5-layer cake at the other end. What was the thesis around Baseten and why you wanted to get in here to co-lead the round?
Ed, it's good to be here. Some truths cannot be said enough times. And one of those is that inference is going to be one of the largest, if not the largest markets, not in AI, in the world. And why is that the case? The early innings of AI were Q&A. Tell me about my trip. We've come a long way since then. It's multi-agent. They've gotten longer context. You go retrieve, analyze, synthesize, verify, and then you go again. And each request is kicking off hundreds, if not thousands, of inference requests. The second thing is, I might correct something you said, Ed. It's not just cost. It's capability, control, and cost. Frontier models, the post-trained open source models comes very close to frontier model performance, sometimes even better for specific workflows. Control, as Satya Nadella said last weekend, you've got to compound your unique advantages as an enterprise, your data, your knowledge, your know-how, in a way that you're not giving away your intelligence on rent. And that's what Baseten allows. And so to your question from this morning is like, where does value accrue? Is it at the app layer? Is it at the model layer? The way I like to frame it is, look, the model layer is a phenomenal business for very few people. It's a game of emperors. You've got to be at the frontier to accrue a lot of value, and it's a knife fight, as you know. I've started joking there's 4 seasons to the year. It's Anthropic, OpenAI, SpaceX, Google, with an evergreen of open source.
Yep.
And so that's
that part is so fascinating, right? If we could just go to open source, when this story started, for us, let's say 2022, but for you guys, probably before that, it was this idea that it was only the model, the largest models with the hundreds of billions of parameters that mattered. And in the world of open source, the issue was that that just didn't work. People couldn't make any real use of them. I go back to what Apoorv just said. You are making utility out of open source models, but probably also at a slightly smaller scale of model. Is that fair?
Yes. Look, I think if you look at, when you think about open source, it's kind of gone through a bit of a journey.
Right.
There was Llama 3, maybe about 2.5 years ago, and then there was a bit of a winter. And then I think the DeepSeek moment last year really put it back on the map, and there was definitely the capability gap shrunk. I think this is happening again just over the last couple of weeks with GLM 5.2, which is, I'd say, a frontier level model that is actually usable and it isn't just doing well in the benchmarks. When people are using it, they are feeling that, at the frontier capability. For us, it's just like, how do we make these models very, very easy to use? And it doesn't really matter what size they are. Like, we work with small models, big models, massive models. What we are trying to give our customers the ability to run these models when they don't necessarily have access to the infrastructure teams of the frontier labs doing it for them.
So let's go back to what you were talking about, Apoorv. Cost, but also utility and capability.
Yeah.
The other case study in this open source debate was Meta kind of changing its narrative, saying, well, actually, we are committed to open source, but at some point we need to be realistic about the benefit of closed models. What is the point on the capability part?
Yeah.
And actually, take a moment, explain what Baseten does, why it is such an important player in that respect.
Sure. Look, it's yesterday it was DeepSeek. Today it's GLM. It'll be something tomorrow. And as I said, it's seasonal. And that battle at the model layer is not, we're nowhere near the end game. What Baseten does is it helps customers like Cursor, like a Bridge, like Open Evidence, harness the power of the model underneath, combine that with your unique advantage as an enterprise, your workflow, and deliver something that is best for that specific workflow. Now, it's not just one model. It's typically a collection, a portfolio of models that are fine-tuned to deliver that, and that compounds over time. And so Baseten is successful as these models get better. It benefits us. And ultimately in the service of the app layer, which is the customers that we discussed, who are delivering AI to the customer.
Jensen's been repeating a lot recently, Jensen Huang, the CEO of NVIDIA. Sometimes you have to remind the audience, just in case. He wants to see his teams burning tokens. How does that apply to your customers, right? So Apoorv's just explained really clearly the value that you're adding, but the economics are really, really important to some of these companies.
Yeah, look, I think using tokens is obviously just synonymous with, hey, I want us to be using AI everywhere.
Yeah, it's in their interest for that to be the story right now.
And I think for us, what we see is like customers kind of go through the same curve over and over again. Is that they go very aggressively, they start using AI everywhere, they start to see gains, but they don't necessarily do it profitably, and then they need to figure out how to do it profitably. And that's when they come to open source models, that's when they come to Baseten, that's when they come to post-trained models on Baseten to be able to do it better, faster, and cheaper. And that's when you start to get both, intelligence everywhere, but also unit economics that make sense for your business.
What I've been trying to reconcile is Altimeter is invested in the big frontier labs as well. And those big frontier labs plus SpaceX, depending on how you define what they are, would also say that they have a role to play in that market. Where are we in this cycle of were there just in the end be very big players? Where does Baseten fit in that?
Look, a lot of ink has been spilled on this debate of open versus closed. Let me just take that head on. The closed models, the frontier models, are very, very good. And they're very good for the use case that require highest intelligence, highest reasoning, new use case discovery. If you didn't want to think about just one model as a service, they're very good, and they will always be very good for that. For a class of customers, that's not a long list. As Jonathan Ross said, there's about 35 companies that drive 99% of all inference. The top 5 are the labs that you just listed, top 4, top 5. The next 30, that's people like Cursor, like Open Evidence, like a Bridge, like Harvey. And for them, if you're not playing the game of the emperors and you're thinking about how do I deliver something that is not rented from somebody else, but mine that I can compound with, that's where post-trained open source can help. And so we posted this chart this morning about how Harvey, for example, achieved frontier capabilities post-training an open source model, but obviously with a much better cost and control frontier, as an example of what the next 30 are thinking about, and then the next 1,000 are thinking about.
Tuhin, Srivastava, back on Bloomberg Tech, founder, CEO of Baseten, Apoorv Agrawal of Altimeter, back again on Bloomberg Tech. It's really great to have you here in person. Thank you very much indeed. Now, coming up on the show, Amazon is pairing Prime Day with pizza delivery. We're going to talk about what's behind the e-commerce giant's fast food pivot next. This is Bloomberg Tech. Today's big number, $26.3 billion. That's how much US consumers are expected to spend on Amazon and other retailers during the 4-day sale that we all know as Prime Day. That figure comes from Adobe. Amazon's facing headwinds, though. Consumer confidence to competition. But the e-commerce giant has a few tricks up its sleeve to encourage shoppers to spend, including pizza delivery. Bloomberg's Spencer Soper here with the latest. Okay, we're getting ready for Prime Day. Adobe Analytics always puts out numbers like this. Put that $26.3 billion into context for us. That's big, it's small, it's growth, it's not.
It's big. I mean, Adobe's predicting 9% growth from the 4-day Prime Day period last year, which was July. You know, it's always tricky to compare Prime Day to the year earlier because the date moves around, and this is going to be the second year that they do a 4-day sale. But Adobe is predicting a 9% lift, which is pretty sizable. And a lot of that can be, it's counterintuitive, even though there's a lot of things weighing on consumers. Sometimes that compels them to kind of save up money and hold off a big ticket purchase for a big deal period, which can raise spending. And Walmart and Target both have overlapping sales, so there's going to be just a lot of deals going on those 4 days.
Okay, the latest tech in depth. Amazon offers pizza in Prime Day experiment. Explain.
So this is the first year I've seen this. Amazon's offering a $5 pizza from Little Caesars. So basically, if you go to the site, you'll see this pretty prominently, a Little Caesars emblem on the site, and you can click over there to redeem a $5 pizza. And they're running that every day of Prime Day, even a couple days before it. And it seems to be something to get people to come to the site. Just another sweetener to get people to come to the site and check out the deals, because Amazon really doesn't have anything in hot food delivery. They had an Amazon restaurants thing years ago that they shuttered. They now have kind of a tie-in with Grubhub. But when you think about grocery, and Amazon really has its eye on the grocery business, a lot of people couple grocery and dinner, especially when it's hot in the summer. You don't get the kitchen hot. So this might be a way to just, get people to check out their deals and also cross something off the list that they got to get done that night.
Bloomberg Spencer Soper with a look ahead to Prime Day, but go and read the tech in depth that went out this morning as well. Thank you very much. Before you go, Disney's Toy Story 5 has gone to infinity and beyond on its opening weekend. Woody, Buzz, and their friends brought in $160 million in US box office sales, marking the best launch in that franchise's history, and lassoed the title of Best 2026 Debut from the Super Mario Galaxy movie. The haul was at the low end of Bloomberg Intelligence's lofty expectations for the film. Enthusiasm for blockbusters, including Toy Story, Spider-Man, The Odyssey, is anticipated to fuel a 10% year-over-year growth rate and the best summer for cinemas since the pandemic. All right, that does it for this edition of Bloomberg Tech from here in San Francisco. This is what markets look like. A little softer on the NASDAQ 100, down a percentage point, half a percentage point, but still outperformance in semiconductors. The stock's up almost 1%. A lot of that being the news flow around Micron and Anthropic's deal. SpaceX down for a third straight session, but well above its IPO price as it goes to the bond market for the first time. Check out the pod. You know where to find it. This is Bloomberg Tech.